Walmart shares have been reversing their earlier losses after they reported their earnings earlier this morning. They beat on earnings per share. They had their best first quarter in 9 years. At the same time, revenue was a little bit light, and we have all those questions still looming about tariffs. Joining us now on the telephone is Chuck Grom. He's Gordon Haskett's senior analyst. He has a hold rating on Walmart with a $99 price target. So, Chuck, thank you so much for joining us. What is your initial take?
I think the numbers are pretty much in line. The total same-store sales were up 3.4%, which was exactly what we were expecting. Traffic increased 1.1%. Digital sales up 37%. On the big 10-cent or more headline beat, the majority of that looks like it's from a lower tax rate, so arguably a little bit lower quality. I think the true surprise here, when people comb through the details, will be the company's U.S. gross margin performance was much better than expected, up about 6 basis points, which is very favorable. To counter that, though, the inventory levels for the company were higher than expected. So I think we'll see a modestly positive reaction to the numbers this morning.
So, Chuck, you mentioned the margin story better than you might have thought. How do you then factor in sort of any kind of trade war into the margin story?
Yeah, I mean, right now, we're not worried too much about the trade issue for Walmart or the most of the names. Clearly, if we go to a higher 25% as the year progresses, that's something that'll be a factor. Probably less so for Walmart, given how much they domestically source, but clearly it could be a factor later in the year. But right now, the gross margin performance was better from lower transportation costs, and I think most importantly, better e-commerce margins, which is something that we've been waiting to see from the company.
Chuck, as I look at same-store sales, they were up, as you said. At the same time, it appears to be up more because of the volume of the total value, of the transaction, rather than the number of transactions. Does that relate to margin?
Yeah, you're right. I mean, the ticket was up 2.3%. That could be a little bit of inflation in the basket. Comp transactions grew 1.1%. But I think, to me, the 3.4% is a healthy number. No greater than expected. If anything, maybe I've missed a little bit of the whisper on a two-year comp, up 5.5%. So a pretty much an inline thing. I mean, I think the sales trends, they state throughout the quarter improved, which we would expect to happen here in the first quarter, given the timing of Easter, given that the weather in the back half of the quarter was better. So no real big surprises on the top line. I think the one surprise here, and it's a favorable one, would be the gross margin performance in the quarter.